When I
Yeah,
put first Majestic together in
hmm
2002, silver was $5.
that's right.
And I called for $50. And, people looked at me like I was crazy. Well, it took 10 years to get there, but silver didn't get to $50. I didn't predict silver was going to go from 50 to 12 over the next 5 years, which it did. But I coined the phrase triple digit silver, not because I'm talking my own book. I put a silver company together for a reason because I'm a bull on silver. It is a very strategic and very much required metal. There's no other metal like it. There's no substitute for silver. I personally still am a big believer of triple digit silver.
Market sentiment has notably shifted from cautious to bullish. A recent survey of 120 institutional investors revealed that 68% now maintain positive silver price expectations for the next 12 to 24 months, compared to just 31% at the beginning of 2023. During the 2010 and 2011 rally, silver rose approximately 400% from its base, according to Bloomberg data. A similar percentage move from recent lows would take prices well beyond $100. KeithNeumeyer predicts that silver is headed for triple-digit prices. He notes that in 2011, the silver-to-gold ratio was around 31 to 1, but it has recently surged above 100, which is surprising given the mining supply imbalance. Silver remains undervalued relative to gold, opening it to significant upside potential. On average, gold has historically been priced at approximately 67 times the price of silver. With the current ratio at 91, silver is selling at a strong discount to gold. Further, silver is mined at only 7 to 1 compared to gold. In his outlook, Neumeyer explains that silver is expected to face a supply deficit over the next 5 years, as mining struggles with low-grade ore and high costs. Despite past delays, he remains confident in a major silver price surge due to tight supply and rising demand. Regarding current fundamentals, Neumeyer states that silver's ongoing supply deficits will force a market correction. Falling inventories and rising physical demand are tightening the market, impacting the paper side. He expects a shift toward a more physical market with fairer pricing and less reliance on derivatives. According to expert analysis, the world is experiencing a substantial supply shortfall that cannot be quickly addressed through conventional means. This structural deficit, estimated at 200 million ounces annually, represents approximately 18 to 20% of total market demand and creates significant implications for investors, industries, and global economies. While reflecting on the big picture, KeithNeumeyer explains that silver recycling has been energy-intensive and steady over the past decade. Strong supply-demand fundamentals are driving its price higher over time. Before we dive into KeithNeumeyer's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Well, when silver hit $50 back in April 2011, the ratio was 31 to 1. And just, recent times we've hovered between, the low 90s, the mid 80s, and we even spiked over 100 a couple of times, which is pretty shocking, because the mining sector, only mines 7 ounces for every 1 ounce of gold being mined. So, that in theory, that's where the financial market should price the metal. Obviously it's not happening. But even, if we get down to 30 again, or even, 10 or 15, you come up with the number, you do your math and divide it over gold. And then, that tells you triple digit silver is coming. And I coined that phrase 10 years ago. And I think I'm going to be right. To that point, David, when I
Yeah,
put first Majestic together in
hmm
2002, silver was $5.
that's right.
And I called for $50. And, people looked at me like I was crazy. Well, it took 10 years to get there, but silver didn't get to $50. I didn't predict silver was going to go from 50 to 12 over the next 5 years, which it did. But I coined the phrase triple digit silver, not because I'm talking my own book. I put a silver company together for a reason because I'm a bull on silver. It is a very strategic and very much required metal. There's no other metal like it. There's no substitute for silver. I personally still am a big believer of triple digit silver. No, not different at all. When I put the company together, solar panels, electric cars, a lot of the gadgets, nuclear power plants, things like that, which all require vast amounts of silver, weren't really on the radar. I was looking at cell phones. It wasn't that much earlier that I bought my first cell phone. I'm seeing everyone all of a sudden getting cell phones and computers, and I said, "Geez, what's going on here? And I came from a copper company, so my mentality was very much supply demand related. Um, and I think that's just simply what it is. We're in 5-year deficits for silver currently. There's no light at the end of the tunnel. There's no reason why all of a sudden the mining sector is going to start supplying more silver to the market. We need higher prices in order to supply more. The mining sector is not going to make the investments to produce more metal because we've got a lot of low grade ore out there that just requires tons of investment to get out of the ground and get produced to supply industry. And we're not there. That's going to take 5 to 10 years to actually start to increase significantly the amount of silver that the silver industry is currently producing. So you're going to get this huge run up in prices just to incentivize the mining industry to make the investments necessary to meet that supply deficit. I was in a refinery in Japan just back in April, and this refinery is running at 50% capacity, and they have a team of people that scour the planet looking for waste, computer waste, generally speaking, mostly computer waste, and they can't find enough of it. Um, the recycling is a very energy intense business. You need hydro or you need nuclear. You're not going to be burning fossil fuels to recycle metal. You're just going to blow yourself up. You can't do it. It's just too expensive. So your energy costs are key. And the technology that particular refinery is using is key because it's got to be able to take out a variety of different metals in these complex components that, we built, to take the gold and silver out of a cell phone is not exactly an easy task. It takes a lot of energy, a lot of time and work to get it out of there, and to do it economically is tough. And if you go back to the previous slide, that one, no, there was actually an earlier one in this presentation. Oh, here it is. Yeah, so the gray bar is recycling, and you see there's a recycling number has pretty much been in the 150 million ounce range over this 10-year period. It hasn't really fluctuated very much. And that's despite price volatility, right? So, that tells you that there's not a whole bunch of recycling going on just because it's too expensive. There's no recyclers to any great degree in North America. Most of this computer waste or recycled metal gets produced in Asia, where they're less um, uh, constrained, by energy use. Oh, for sure. These deficits have been now 5 years in, and actually, if you go back further, which we don't have on this slide, there were deficits previously as well.
Yeah.
But, the market doesn't pick up on this stuff. As I said, most people don't understand silver. I think silver is probably the most misunderstood metal on the planet. It's looked at by some as a currency, which I don't believe. I look at it as a strategic metal, and I think investors are waking up to that. But it's always been looked at as a poor man's gold. I even heard someone the other day said, "Oh, because gold's $3,300, people are now buying silver because it just makes more sense." Well, that's not the reason to buy silver. To my mind, anyways. I own gold because it's a hedge against currencies. I buy silver as a long-term investment because I think prices are going to be much higher due to the supply demand fundamentals, and it's not in their best interest to see the silver prices go up. But now with these deficits, and you ask me what's going to change that, with the deficits, I'm a firm believer in markets. I started in the banking sector back in the 80s, and I think markets do go through these periods of we'll call it incorrectness or whatever you want to call it, but they do come back to reality and they do correct themselves. And I think the physical side of things are causing issues, and some of the things I'm hearing, what's going on in the physical markets. We see the transfers, we see inventories dropping around the world. ETFs, are also now accumulating more physical. So there's a huge draw on above ground supplies, and that's, I think, going to ultimately affect the paper market. I don't see how it cannot affect the paper market. So I think people are also waking up to that fact, and people are now wanting to take physical delivery, not just of silver, but of course we're seeing it in the gold market as well. So yeah, I think it's all good, and unwinding
Mhm.
old markets the way they used to run into getting into a new, more physically driven market, it takes time.
Precious metals specialist KeithNeumeyer explains that most silver is a byproduct of other mines, so boosting its production isn't prioritized. He highlights that slow and costly permitting, due to environmental studies and political hurdles, can delay new mines by over a decade. According to him, limited North American smelting capacity also forces concentrate exports to Asia. After years of institutional neglect, the silver mining sector is experiencing a remarkable shift in investor sentiment. The confluence of strong metal fundamentals and attractive valuations has finally captured the attention of large-scale generalist institutional investors who had previously avoided the sector, indicating a fundamental shift in how mainstream institutional capital views precious metals exposure. This institutional awakening comes at a critical time for the sector. ETF inflows have reached their strongest levels since 2022, while physical demand continues to surge. The combination of institutional interest and retail demand creates a powerful buying dynamic that has kept silver's price remarkably resilient. Moving forward, KeithNeumeyer states First Majestic produces 32 million silver equivalent ounces annually and focuses on permitted or producing assets. If silver prices drop, they cut their workforce and exploration to stay profitable. Let's get back to the interview.
Most silver miners, silver is a byproduct. So there are copper mines, there are gold mines, there are zinc mines. Silver is just noise on their financial. They don't even tell you, report to you how much silver they produce because it's such a small item for as a revenue item for them. It adds a little bit to their profit, but they're not going to increase investment at the mill or the mine just to get a little bit more silver out of the mine because all the revenue is coming out of their core products, which are generally speaking copper and zinc and gold. Well, there'd be two things, and generally speaking, it's permitting.
Mhm.
So you would have to reduce the permitting cycle. I'm the chairman of a company called First Mining Gold, and we have a very large gold project in Northern Ontario, which we purchased back in 2015. So 10 years later, we spent $100 million on permitting. And there's a light at the end of the tunnel, thank goodness. But all permits we're expecting will be in place maybe within 1 to 2 years, and then groundbreaking can start. Then you're looking at building a facility, which will take you, 3 to 5 years to build it. So from discovery to production, because discovery was 2010. So um, that would be 20 years, which is pretty normal for a mine. And that's all bureaucratic. The governments can reduce that if they wanted to. And a big copper mine, big silver mine, a zinc mine, whatever the case may be, it doesn't have to be gold, but they need to allow the mining sector to go in because this is large dollars. So boards of directors have to allocate this capital, and investors around the world, these small public companies have to go continually back to market to find new investors. And when you're looking at 20-year timeframes to get from drill bit to first pour, that's a long time. You got to be pretty darn patient. So management teams have to be focused. They have to raise that capital, and they have to rely on governments to support them through that whole 20-year period. But it shouldn't take that long. And if they could reduce that by 50% or even 75%, then all of a sudden the mining sector would wake up and say, hey, like we can actually put money into this asset and bring this asset into production much more quickly, and we'll be willing to spend the 500 million or the $1 billion it would take to bring that mine into production. But right now, there's just no stomach for these boards of directors or these management teams to finance these assets because of the government risk. Because we don't know the regulatory the permitting risk in a lot of cases. And then the other side of the equation is the smelting industry. There's very few smelters that have capacity in North America. So if you have a mine that you're bringing online, and you're producing a copper con or a zinc con or whatever the case may be, with silver contained in it, of course, and gold likely contained in it as well. Where is all this concentrate going? It's not going into North America. It's going into
Un-
Asia. So it's because there's capacity in Asia. So the governments would allow the mining sector to build smelters and increase smelting capacity. We could keep a lot more of this metal on shore versus shipping it off seas where we never see the metal again. Well, zoning it's usually, this is usually government owned land. It's usually crown land in Canada's sake, or federal land in forestry land in the United States situation. So, you need the federal government on side. So that's very political. So, having a mine being built is, political hot potato in some cases. So you need, politicians on side, and sometimes that's a bit of a challenge. Then the actual permits themselves, you have to get through the environmental side of things, and you have to do water quality tests. And I'll give you an example in the first mining gold situation. We had to collar 50 caribou 8 years
Yeah.
ago, and then they've been tracked by GPS. So we know exactly where these caribou go. So that when all the roads get built into that operation, that we don't, build roads over top of, past the, caribou, right? Which makes sense. We don't have a problem doing that. But it's not only that. It's fish studies, it's water studies, it's, flora and fauna studies. It's just study after study after study. And
Yeah.
all these studies cost money. You have to hire consultants, you have to hire lawyers, and you have to raise money to do it. And these are multi-year studies that take time. Yeah, it's just quite complex. Well, synergies more than anything. Los Gatos Silver Mine came into our portfolio in January, and it had its own, it was a single asset company, so it had a lot of costs associated with that, high exploration costs, high energy costs, just, a bunch of stuff. So, First Majestic being much larger company, we're able to go in and redo a lot of the legacy contracts and just buy products, buy chemicals or whatever the case may be at much lower prices because our purchasing power is much greater, reducing exploration costs by 20-30% on a per meter basis, just because we have huge exploration programs. This year we're doing about 250,000 meters of drilling. We had 28 drill rigs active throughout the business. So, these drill companies want to do business with us. So, our contracts are, are much better looking contracts than a much smaller company would ever be able to get, right? So that puts us in a
Yeah.
lot of strength. Yeah. So, anyways, so as a result, cash go down, cash costs go down, but we're always looking for ways to continually drive costs go down because we are in a much inflationary environment, and we always have to have our eye on the ball to
Mhm.
continually reduce costs. When silver went from $50 to twelve bucks, what did we do? We laid off a third of our workforce, so 1,500 people lost their jobs. We cut exploration down by, 75%, I think it was. We cut
Mhm.
our development costs down by 50%. So the three largest costs in any mining company is headcount and exploration and development. So those are the three things that get hit first. And that's what we did, and that's what the mining sector does. And so that all-in sustaining cost of $19 that you showed on the previous slide, that's at already an elevated cost because we were on full guns. Our development cost, which is also on our presentations, is close to $70 million. Our exploration costs are $45 million. So we're pumping on all cylinders and taking advantage of the current metal prices, and that is reflected
Yeah.
in that $19 all-in sustaining costs. So if we all of a sudden start cutting those two investments, that all-in sustaining costs would drop substantially.
Analysis of silver performance during periods of above-trend inflation shows consistent outperformance relative to financial assets. When real interest rates turn negative, silver typically benefits from capital flows seeking tangible assets. The current silver market is characterized by a growing imbalance between available supply and expanding demand, a gap that shows signs of widening rather than closing in the coming years. The silver bulls are out and about. They're pumped that the metal is showing signs of a breakout that could sling prices higher. With supply deficits deepening and demand intensifying across both industrial and investment channels, silver's bull market appears well supported. Silver presents an attractive opportunity for investors seeking exposure to a hard asset that offers both growth and defensive qualities. Expert forecasts increasingly point to a continued upward trajectory. The average price target among major banking analysts for 2025 and 2026 has been revised upward to $42 to $45 per ounce, with some specialists projecting potential moves toward $50 if supply constraints persist. With the fundamentals aligning and investor interest returning, is the world finally ready to price silver for what it's truly worth? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.